Hey, what's going on, traders? Hope you guys are doing well today. In this video in particular, I wanted to talk to you about something relating to the broker interactive brokers and a reminder they send out every month to their clients regarding market orders. So in this video, I'm going to tell you exactly what this is, and I'm also going to tell you my interpretation of it from the point of view of a somewhat experienced trader. So let's get it going here. If you enjoy this type of content, leave a like on the video, subscribe to the YouTube channel for more content like this. Here we go. Okay, so if you have an account with Interactive Brokers and you have used a market order or a stop order at some point during the cycle of 1 month, you're going to get this message sent to your email. Now, there is going to be something interesting towards the end of this video, which is the notification that they send to you if you did not use a market order during 1 month. And that in particular is something very interesting. But first, let's cover this reminder and then we'll get on to that other reminder. So let's get to it right here. So this is what they send to you if you use a market order. First, I'm going to read it out loud to you as they wrote it, and then I'm going to give you more or less my interpretation of it. Here we go. Ibkr FYI. Dear client, we noticed that you have submitted market orders in the last month in your account. Please see important information below regarding this order type. Please note that a market order is an instruction to trade your order at any price available in the market, subject to any additional instructions for handling, simulating the particular order type you specified, or other order conditions you specify when submitting your order. Okay, so they do make a reference to an order that you attach a condition to. For example, I have prompted a market order to submit once this condition is true. Once Apple shares are trading at a price of $1, I want to submit a buy market order. Until Apple is trading at $1 or below, that market order will never trigger. Okay, let's keep going. A market order is not guaranteed a specific trade price and may trade at an undesirable price. If you would like greater control over the prices you receive, please submit your order using a limit order, which is an instruction to place your order at or better than the specified limit price, or submit an algorithmic market order, IB algo. Now, guys, I want you to pay very close attention to how they worded that and how they decided to place this at the end of the sentence. The algorithmic market order. Okay, we're going to get back to this as the video continues here. I'm going to keep reading it, then I'll give you my interpretation. In accordance with our obligations as a broker, large market orders may be split into smaller orders, which will be traded over time. That makes sense. This is designed to reduce the impact of these large orders on the market, including the impact your order has on the market price. Now, believe it or not, this might not be ideal for some traders. Like, if you're actually trying to buy all the offers available in the market, you don't want your broker to be splitting up your order. You actually want to buy all the offers at one time. That's something more niche. It's just an example I could think of where a trader might not want their broker to split up a large market order because maybe the trader actually intended to submit that order all at once. Please note that we will send you similar FYIs each month in which you place a market order to remind you of this information, which IBKR is providing in accordance with its regulatory obligations. All right, so that's what they say when you submit a market order. I'm going to go on to my interpretation of this, and I want to explain to you a few important concepts here. Here we go. So what a market order essentially is, guys, it's an order that you submit to your broker. Your broker sees the order first, it gets sent to their systems, and it is what I call a get out of jail free card to the broker to essentially fill your order at any price at all. Now, theoretically here, if the market is bid at 76 and it's offered at 76 and 3 cents, and you buy market, you should receive the fill at 76 and 3 cents in a slower moving market. However, in a faster moving market where the spreads are moving around a lot, where there's less liquidity, these guys and other guys, traders, scalpers, I will call them, they love when traders use market orders. And what they actually love is they love taking the other side of it for a scalp. Okay, so let's continue here. So in a faster moving market, the offer is 03. I think it's unlikely you're going to get 03 as a fill. You might get 07. Just an example. Again, the basic concept here is that when you submit a market order to your broker, it is what I call a carte blanche or get out of jail free card to your broker to fill your order at whatever the price they want. Now, that being said, if I was a broker, which I'm not, and I had thousands of clients around the world, I would make sure that every time my systems receive a market order, that the system automatically scalps a tick or two off of them. Now, am I saying that they do this? No, I'm not saying they do this because I do not know if they do this. However, if I was a broker, I would have my systems configured that every time one of my customers submits a market order, my systems in that moment potentially limit, bid, get filled, and then fill your market order. If there's a fill available better than the fill that a client will receive on a market order, which is normally if you buy, you're going to be buying the offer. And if you're selling, you're going to be selling right into the highest bidder. Then my algorithm will get filled on the bid and then fill your order in a matter of a millisecond. So that's what I would be doing if I was a broker and I had clients submitting market orders. Now, is that what they're doing? I don't know. Okay, so you guys know that a market order is not a guaranteed trade price. So they do tell you, if you would like greater control over the prices you trade, please submit your order using a limit order, which is an instruction to trade at the price you select, or better. Or better, that makes no sense, because if I submit a limit buy at 76.5, there is no chance that my order can fill at 76.25. Someone correct me if I'm wrong there, but I'm pretty sure that if I want to buy something and I submit a bid, there's no chance that if my order fills, it's going to fill at a better price than what I put as my bid. I don't believe that is possible, but it might be, so please correct me if I'm wrong there. I hope you understand this. Now let's move on to the next part of this video, which is the notification that Interactive Brokers will send to you if you did not use a market order this month. Here we go. Try adaptive algo for faster fills. Dear client, since you place non-marketable orders, you may want to try using patient adaptive algo orders instead, as they attempt to achieve the fastest fill at the best all-in price. Please see our website to learn more about adaptive algo orders. All right, guys. Okay, this really made me laugh. Okay, so I've been studying for quite some time about scalping and techniques that traders will use to get an advantage over the average trader, per se. Now, for example, I didn't use any market orders in this account this month. I don't day trade in this account, but I didn't submit any market orders. I only submitted limit orders. Now they're telling me, dear client, you didn't submit any market orders this month. You may want to try using patient adaptive algo orders, which is, by the way, guys, a market order with an algo attached that is set to scan across the bid offer spread for fastest fill at best all-in price. So what they're basically telling me is, dear client, you didn't use a market order. You may want to try using a market order. So someone who doesn't know about trading that much and about scalping, they're going to look at this and they're going to say, okay, I'm going to try using an adaptive algo. There's nothing wrong with the adaptive algo, by the way, except for the fact that you're giving away an edge, which is selecting your price to trade at. Okay, now what's happening here when you use an adaptive algo? Okay, again, your order is getting routed to IB's systems. So what the adaptive algo does, to my understanding, we can even go to the page here, is it will scan across the bid offer spread for best available fill in the shortest amount of time. But it's still a market order. Now, within that time window that you selected, either patient, regular, or fast, they have the opportunity to scalp a few ticks off of it. If I was a broker and I was providing this type of technology to retail customers, I would be scalping a few ticks off of every single order my clients put in with an adaptive algo or with a market order. It's the same thing. Adaptive algo is still a market order. It just has that extra scanning mechanism that will likely result in you getting a slightly better fill than if you just hit the ask or hit the bid for a sell. But it's still a market order at the end of the day, and there's no guaranteed fill price. All right, guys, so that was just some debunking. That's gonna cut it for this video. I just wanted to go over these FYIs they send you at the end of every month, and I thought it would be interesting to talk about it a little bit and maybe give you guys a little bit of what I think it actually means. Anyhow, if you enjoyed this video, feel free to smash like, and I will catch you on the next one. Take care, bye.